Okay, sorry about that. So again, the stuff I'm doing right now is going to be on the whiteboard. You won't be able to see this actually on the video, but you'll be able to hear the audio. And then the majority of what we're going to do is on the screen anyway. So what we were talking about last week, or the way we ended up last week, is if you have a $100,000 income and you have zero, so this would be your income, you have zero expenses. I'm going to do zero right here. And let's just say, for argument's sake, just to simplify the math, that you're in a 25% tax bracket. You would actually be in a higher one, but it just makes the math easier for me to do. So because you have zero expenses, the entire amount of income is taxable. So again, you would have, this would be taxable income. And at 25%, that would actually be $25,000. That's what you would have to pay in tax. On the other hand, over here, let's say that instead you've got the same $100,000 income, but now you have $50,000 in expenses. Actually, let's not use 50,000. I'm going to do a different number just because this, I'm trying to keep this from being as confusing. Instead, we'll do $20,000 in expenses. So before you figure out what in order to figure out your taxable income, you subtract the expenses from your income. Make sense? So you make $100,000. You bought a new camera, you bought a whole bunch of seamless, you bought another new camera, a power pack. Anyway, it all came to $20,000. You actually subtract that $20,000 from your income. You're left then with $80,000 that is taxable. This makes sense to everybody, right? We all good on this? Again, you're still in that same 25% tax bracket, which is a quarter of this. So your income tax would, so the tax, that would be due on this is a quarter of $80,000, which would be $20,000 in tax. And what I was trying to say to you guys last week, and I think sort of where everybody hit the wall just a little, well, it had been a very long night. Unfortunately, tonight's going to be as long. But the part that I was trying to sort of impress upon you is that you can see the difference in both of these. Again, the income taxes rates were the same, whatever. However, there's a $5,000 savings in tax on this, right? So you're $5,000 less tax than you are here, right? And that $5,000, I'm going to do it up over here. So the $5,000, is actually, if you look at these expenses right here, it is the expenses. So this $5,000, the savings, it equals your expenses times the tax rate. And what I mean by that is this $20,000 right here, $20,000, again, times this 25% tax rate equals that same $5,000. So the way people tend to think of this is that when you have an expense, the government will save you or will not tax you on the same rate of your expenses, your same income tax rate. So if you have, in our case here, we have $20,000 in expenses. The truth of the matter is that $20,000 expenses, we're going to have a $5,000 savings in that. So we will pay $5,000 less in taxes, but we still got a $20,000 expense. Make sense? Are there questions about this? So the reason I bring this up is that some people say, oh, I have a $20,000 expense. I'm just going to knock $20,000 off of my taxes. And that is not how it works. What you end up doing is you end up saving the income tax rate that you are paying of those expenses. Make sense? So the only way that if you had a $20,000 expense and you were going to expect to have your tax bill reduced by $20,000, you would have to be at a 100% tax bracket, which would be all your money. It wouldn't happen. Make sense? Okay, are there questions about this? Okay, so what I'd like to talk tonight about is we're going to sort of like carry this thing on further one more time. I think I actually showed this to you. This is our Moodle site. This is for session week number 2 right here. I'm going to go back and look at session week number 1. There is in session week number 1. I showed this to you again, also at the very end of our class. This income and expense categories. There are exhaustive ones of these. I just wanted to go over this one again to show you guys really quickly what some of these things all actually are. Let me actually open this guy up in something a little bit bigger. Okay. So again, I told you, I explained some of this to you guys before. Because I have income in multiple states, I actually tracked it in different states. So photo fees for me right here is would be Chicago. Photo fees _ NYC was the work that I'm doing in New York. I keep my income expenses. And what do I mean by income expenses? So let's say that I do a photo shoot and I hire an assistant to actually do the photo shoot. So I'm going to hire Alicia to actually help me out on this photo shoot. I'm going to pay her $300 for the day. Well, I typically mark my expenses up. So when I go to bill the job that we did to a client, I'm going to bill Alicia at a higher rate. I'm going to bill her at $350, $400 a day. I'm going to make money on it. So I'm going to, when everything is said and done, I'm going to cut her a check for $300, but I'm going to bill the client $400. So the client pays me the $400, less than the $300 I pay her. I make $100 on her. Make sense? And you can do that forever. You can do that on a lot of things, whatever. But that can really skew your perception of how much money you're actually making. I am making the money. However, it doesn't give me a good snapshot of what my photography business is really doing. I want to know what my fees really are. If I track only my fees, then I can see is my business doing better or not. I made $50,000 in photo fees this year. I made $75,000 next year. Well, clearly my business is doing better. And the reason I point that out is I think I told you this story before already. There's a photographer here in Chicago, incredibly successful, started doing his own production on his stuff. He was shooting Spiegel, that the Spiegel story. This guy, a really well-known photographer here. At the end of this year, this was the last part of Spiegel, and Spiegel was spending money as fast as they possibly could. They were only hiring the top models. He was marking everything up. He made $2 million that year on his photo fees, and he made $20 million on his production markup. So if you look at his business like that, all of a sudden you say, oh, he's made $22 million. But that wasn't his photo business. That was his production business plus his photography, right? So if he's trying to track how his photography was going, you need to remove the production part of it. And that's why I track them separately here. Then in terms of expenses here, all sorts of things can be your expenses. We did have this conversation last week. Everybody looked at me when I said you can write off your cable bill and looked at me and said there's no way you can do that. I say, yes, there is a way you can do that. You should be doing that. This is the way you need to think about your expenses. My best advice that I can possibly give you. First and foremost, do not do anything illegal. What does that mean? Two things that are possibilities here. The first is that you make money and you don't declare it. So somebody pays you for a job and you keep it under the table. You don't put it on your books. You don't report it to the IRS. That's illegal. You can go to jail for that. More than likely, you won't go to jail unless you're doing it in a really big way or you're famous like Martha Stewart. So that's the first thing you can't do is don't do anything illegal as far as that part goes. The second thing, so first illegal thing is to not declare income. The second thing to do is to fabricate expenses that you don't actually have. Both of those are, you shouldn't actually be doing. However, you can be very aggressive in terms of what you consider to be a business expense. What you need to actually run your business, to do your business. So, are tickets to the ballet deductible? Why? Your inspiration, your visual feed. You know, you're seeing current contemporary art that's feeding into you. You can turn around and take that same imagery and build that into your art, so it's a source for your material. You can argue this shit to death. So you get audited, and the IRS people say you wrote off tickets to the ballet. That's bullshit. So you get to go up in front of a judge, if it goes that far, And the judge looks at you and says, and you explain this to him, and you say, I had a legitimate reasoning why I think this is a legitimate expense. Well, he can't throw you in jail for that, because it could easily be argued. That could actually go either way. That's not this like black or white issue. It's not like you're a plumber and you're writing off your valet tickets because it's inspiration for how you tighten a thread in the bathroom, right? That's not what this is. It's legitimate, right? But he says, okay, no, wrong. I'm discounting that. So when that happens, you end up having to pay the tax that you had written that you had not paid before, right? Well, if you hadn't tried to write this off to begin with, you would have paid the tax anyway. So there's no loss in this. You took a shot, you were turned down, so you end up paying the tax that you were going to pay anyway. So what's the downside? You tried, you lost. Okay, so what's the big deal? However, there's another element to this. When you try and you lose, they not only do you have to pay the tax, but again, that's a wash because you were going to pay it anyway. But the second part is that you actually have to pay interest and a penalty on you're not paying that tax, right? Does that make sense? However, your interest and penalty is deductible on your next year's taxes. Yeah. See, now Donald Trump has a team of accountants and lawyers that do this for him. You don't, I don't. So you have to know this shit. Are there questions about that?
When do we reach the point of being able to like make those like deductions since we're students?
No, that's a great call. Whatever. You cannot do it right now as a student. I mean, you could essentially if you had no other job and your only job was photography, and even if it was you were only making $1,000 a year. As long as you didn't have a job at like Whole Foods or waitressing or whatever, where you're making, you know, your $15,000 a year or whatever, it's at whatever point that photography starts to be at least half of your income, if not more. At that stage of the game, it would be considered your primary business, and you can start doing it right away.
What if you worked for a company? Like you were the photographer, you worked for a company, you weren't your own.
I do know exactly what you mean. In that case, you would actually talk to your accountant about this part. The checks that you would be getting from your company, you would still be as a photographer. The side business, not side business, but the additional photography you were doing, there's no reason that cannot be lumped into one great sum as a photo business. So as long as you're shooting pictures for somebody else and you're doing weddings and side stuff on your own, whatever, overall, that is your photography career, and you are entitled to write every bit of that off. All right, are we good on this? So then the question becomes, how do I do this? How do I keep track of all this stuff? So here's the thing that I need to stress, and I can't stress this enough, especially at the stage of the game that you guys are at right now, is you have got to separate your personal life from your business life. And what I mean by that is that you need a separate banking account for your business, a completely separate checking account that is not your personal one, not any of that kind of stuff. It's completely separate. It can have whatever your business name is going to be. In my case, it's Engelhardt Studio. So in my case, I have a personal checking account that's John Mercer Engelhardt on it, and I use that to pay all the things that are not related to my business. So for instance, I could go to Denny's and buy a case of wine, and actually I would pay that with a personal check. Sadly, wine is not a business write-off. If it was, I would be, anyway. But I have a business, my business is Engelhardt Studio Incorporated, and so I have a checking account that is just Engelhardt Studio Incorporated. All of the business stuff is run through the checking account for business. All the personal stuff is run through the personal stuff. I showed you guys last week when I was talking about living in one single space where I was mixing business and personal both. Remember, we were talking about what you could write off. Anything, for instance, if you have an office in your house, as long as that office is 100% for business only, you cannot have it. It can't be an overlap. It can't be the den that you use as an office. It can't be a second bedroom that you use as an office. If you are going to write it off, it has to be 100% only for business, nothing personal. But for the things where there is that situation, where there is an overlap, I actually took a floor plan of my studio, of stuff that was mixed use. It was personal and business. I couldn't write that off. The stuff that was only business, I could write all of that off. In my case, it was a 30-70 split. It was 30% personal, 70% business. So when it came time to write checks at the end of the month, I would use my personal checking account to write the 30% of my rent, and my business account to do the 70% of my rent. I would do the personal account to do 30% of my gas bill, the business account to do 70% of my gas bill. My electric bill, 30% was paid by my personal account, 70% was paid by the business. And there's two, then if you do get audited, you can go to the government and you can say, look, these are two completely distinct different things. This was the personal stuff that I was doing, this is the business stuff I was doing. Make sense? The government is going to expect you to have meticulous records. So the number one thing that you need to remember about doing that, I'm going to show you the checking account part in just a second, but you've got to keep this in the back of your mind. You need to keep a receipt for every single thing that you write off. Every single thing. And people don't believe I do this, but I swear to God I do this. I go through a toll booth and I pay 15 cents for the toll and I ask them for a receipt. I've done it my whole life. You'd be shocked at how much this ends up saving in the end. Absolutely shocked. But nonetheless, I do it for everything. Do not take those receipts and throw them in a fucking shoebox and expect that to be order. That is chaos. That is not order. So you need to develop a filing system that keeps this stuff hopefully, roughly. What most people do with this, to be honest with you, is they'll take all of their receipts for a month and jam it in a single envelope. So you've got your receipts, your cash receipts for March, and then you've got the next one's for April, and the next one's for May, and all that kind of stuff. So that if you do get audited and they say, let me see the receipt that you had for the 15-cent toll booth dated March 15th, and I could go to my little March file and open it up and go through it all, and here's the receipt for it. It's just an impression that you give on them. Does that make sense, what we're doing here? So I don't do this, but I know people who do. There are people who will do the same thing with a credit card. They will have a credit card for personal, and they will have a credit card for corporate. I actually don't go that far. What I do is I have one credit card that mixes personal and business. But again, I go through my credit card statement at the end of every single month, and I separate what is personal and what is business. I use a business check to pay for the business part of it, and I use a personal check to pay for the personal part. Yes? I would say a separate credit card, especially if you do one that's got no annual fee on it, is probably a better way to go about doing it. It just simplifies it. Yeah, it's a yes. So it's a do as I say, not as I do. Okay. So I'm going to show you guys how I would deal with setting up the checking account part of it. If you look again on our website, you'll actually see there is a couple of suggested software programs to do this. You can actually do this by hand. When I very first started doing this, I had a ledger that I would write all of this stuff into. That is an enormous pain in the ass. You don't want to do that. Just throwing that out there. Quicken is one of the, and these are all links to these websites. Quicken is actually costs about $80. It's the one that I use. I'm going to show it to you. The version I've used it since the early 2000s. So it's just a system that I'm in. It's not one that you have to use. It's a possible one. Personal Capital is another one. This was actually a free one. You can actually try that. FreshBooks is another one. They all basically do the same thing. So I'm going to show you how Quicken works for me. So I'm going to start out, again, this is basically just an open ledger. The only thing that I've done is I have created a checking account. You can see it's checking account right here. And then I've created a cash account. Those are the only two things that I've actually created. And you build these in Quicken. And again, they're really easy to set up. And you can actually tie these in electronically to your bank so that it'll download statements and do all that kind of stuff for you. I actually don't really do a whole lot of that stuff. But nonetheless, just so that you know this part is here. I'm starting with an opening balance, and all I did was I just put $10,000 into the bank account. That's actually all I did here. So I have got a balance of $10,000. Does that make sense what's going on here? Okay, so I do a job. Let's say I do a job for Bonton. That's Bonton, Carson Perry Scott. That's who this is. So I do a job for them, and I bill it out. My rate for them is $3,000 a day, and Alicia's working for me, and she's $300 a day. So the bill that I end up doing for them, it's a 5-day job, and what I end up doing for them is my bill or my invoice to them is $15,000 in photo fees and $1,500 in assistant fees. And so my total bill to them is $16,500. That's what I actually am billing them. So they send me a check, and which is great. And so to do the check, whatever, you have today's date is put in. So we're sitting here in the beginning part right here. Hit the tab key to come over, and I'm going to put in deposit, because I'm making a deposit to my checking account. Now, I've already developed lists for this. If you take a look at my lists right here, you can see what they basically call categories. This is something that actually starts out, you can build your own. The Quicken actually comes with a series of these that are canned already, but you can build your own. But this category thing is really important to actually have. And you'll see, we're going to actually add some of our own right here. However, so what I'm going to do is I'm going to put in Carson Perry Scott. Let's make that Perry Scott. P-I-R-I-E. Carson Perry Scott, it's a department store. And so I'm going to come over here. Again, I'm just using the tab key to get over. And they are going to send me a check, and they send me a check for $16,500. So I put in $16,500. I'm going to go to the next line. Typically, what I put in here is my job number. We haven't talked about job numbers in this class, but we might as well start doing it right now. Typically, the way I do job numbers is this. You do not need to do it the same way. There's people who come up with very esoteric ways of doing it. For me, it's just the simplest way I can do it. Let's say that I shoot a job today for Neiman Marcus. All right? What I would do is, again, I take the first 3 letters of the client, which would be NIE. Then I actually do the year, which would be 2016, and then the month, 02, and then the day, 02. This is the second, isn't it?
Well, it's 2007.
Oh, thank you. Can you tell I've been at this since? Thank you. Today is the second. Okay, so this is my job number, and it lets me know who the client was for and when the job actually started. I just use it that way. So you can do whatever your own is, but this way it just allows you to keep track of this. So in the case of Carson's, let's say I did the job on the 15th of January, it would be CAR 20170115. That would be the job number for that, and that would actually be on my invoice. Finally, in this open or split category, like right here, if you open this guy up, it says, first off, it says it can't find this. Would you like to put this on a list? And I'm going to say, no, don't do that. Hang on one second, guys. I'm sorry, I put this in the category line, not the note line. So let me get rid of this. This actually belongs here. Sorry. This is a category right here, and I'm going to split this category. So what I'm splitting the category in is my photo fees. And my photo fees would be $15,000. And then my photo expenses is, again, this is income for me. Carson Perry Scott is sending me $15,000. That's income for me. I have to call this income. So even though they are related to expenses, this is actually income for me. And then I'm actually going to just hit record. And so what has happened now is that this has actually recorded it. It split this into 2 different categories. If you look at the split up here, again, 15,000 of it was photo fees, 1,500 of that was photo expenses. Does that make sense what we've got so far? Okay, so then it comes time to actually pay Alicia. So I'm going to come up and I'm going to write a check, and I click on this. And again, it can be today's date. I'm going to click to go over to the next column right here. I'm going to put in, Alicia, what's your last name? Oh, that's right. Elisha. Okay, so I'm writing her this check. It's for $1,500. When I come down here, I would put in, again, her address and all that kind of stuff. But here in category, I'm going to type in ASS to start to spell assistant fees, because that's what it's for. And I'm going to go ahead and record this. Once I'm done doing all of that, I can actually come up here and I can actually print the checks as well. But you see what's beginning to happen here. All of my money, all the inflow and the outflow is going through this checking account. Make sense? And then finally, what really is the best thing about this is, get rid of this guy right here, is the reporting part. Hello, that doesn't seem good. Okay, we'll try that a different way. This is, I've created this thing just to actually show you guys here in class. So this is actually missing a couple of things. I'm going to add something here really quick. So hang on one second. Let me see if I can find it. Well, let's try reporting again. Oh, that didn't work. Oh, actually, maybe it did work right here. Oh, yeah, sorry. I'm blind. It just got rid of my registers. That's not how this program usually works when I have it open. So I'm going to go over to reports right here. Again, there's a whole gazillion different reports that you can actually do on this. I'm actually going to simply click on an income statement, and I'm going to do it for this year, just basically year to date, so it knows when this is. So I'm actually going to create this report right here, and you can actually see that what's ended up happening is that it gives me the breakdown of what I've actually made. So it tells me that I made $1,500 in photo expenses, that I made $15,000 in photo fees, that my total income was $16,500. It also shows what my expenses are. All of these categories for expenses need to be itemized for your accountant. So again, if you label one as advertising fee, it'll be under that. One is legal fee, it'll be under that. Does that make sense what's like going on here? And so then it gives me, it tells me that my total expenses were $15,000, and it actually gives me my breakdown of that the actual net taxable that I made that I can apply the tax to is $15,000. Does that make sense what's going on here? All right, I just want to show you one other thing really quickly. Back to banking. This is how you would deal with a credit card. So I'm going to open up a credit card account right here. Again, I'm going to write the next check. So I'm going to click over here on Visa. And let's say my Visa bill is, oh, hang on one second. Make sure Alicia is still up here. Yeah. The reason I put in 15,000 before is because I've done this before and it actually remembers the last amount. But let's say I'm going to make mine $3,654. Again, the way this goes out, whatever, the address that this would actually go to. I'm actually going to open the split on this one. And in this case, I've got ones that I've written here previously before, but I'm going to clear that split. And now I'm actually going to put in what those things were for. So let's say I had a travel expense that was $2,300. And you simply hit the tab key. It will continue to subtract this out for you and keep a running track of it. So let's say I had magazines and books. That was $385. Then let's say I had assistant fees. No, advertising. That's a better one. Advertising was $500. And then finally, gasoline was $469, right? So I would go ahead and record that. Now when we actually look at my reporting, again, on this quick report, well actually not quick report, on the regular reports, again we're going to look at the income statement and create this. And you can now see that again, it's tracked everything for me, it's done all the math for me. It tracked what the advertising was, what assistant fees, gasoline, all that kind of stuff. It breaks it down separately for me right here and actually puts it into here right now. Does that make sense? I'm going to show you one last thing on here so you can see I'm actually, my taxable, because I've got more expenses, my taxable income is actually going down. I'm going to show you one last one right here. You'll notice right now that assistant fees is $1,500. It was the stuff that I paid Alicia for. But let's say that I've also hired Andrew to actually do a job for me as well, and I had to pay him as well. So I'm going to do an Andrew's job. Was $1,000. And again, click all the way down. You've got to, so let's say right now you don't remember this. I'm going to just click record for this, and you'll see you get this warning. It comes up and it says, did you forget something? Quicken uses categories to track your finances. And I realized, oh, I didn't put in assistant fees for that. So this would be, again, putting in assistant fees. Now I record this. Now when I actually go to my reporting and look at my income statement, you'll actually see now that it has added that extra $1,000 to the assistant fee, and it's actually given to me right here. Another thing that happens in Quicken, and you'll notice when you hover your mouse over this amount right here, you can actually click on it, double click on it, and it opens up and it will show you what was used to generate this expense cost. Does this make sense what's going on here? So it's the easiest thing in the world to track your expenses. All the money that comes in is deposited into your checking account, into your business checking account. Any expense that your business has is paid with a check going out of it. Now you can do electronic transfers. You don't have to actually write a physical check. The thing I like about this program though is that not only do you list all the checks on there, do you actually go, then you have checks that you can actually run through a printer. This thing just prints them out. You hit the print button and it kicks through and prints them all out. But it will also do all of your stuff electronically banking if you want to set it up that way. Are there questions about this? Okay, this is going to be a little deep right now, but I need to get this through to you guys really quickly. And it's how you set your business up, the type of the business. We've talked about, well, I take that back, not the type of business, the type of accounting that you actually do. There's two kinds of accounting that you actually do. One is called cash accounting, and that's what this is a system of. So this would be cash accounting. And the other is accrual accounting. Does anybody have anything open that they can look up the spelling of this? Can you look up, I think it's A-C-C-R-U-L, I think. R-U-A-L. R-U-A-L, thanks. And they work two different ways, and I just want to show you the difference in the two. The majority of people that are small businesses like you guys will probably start out, probably are going to use cash accounting. It's more simple, it's pretty direct. So anyway, I'm going to just explain the differences here. So what happens in cash accounting is, here, let me actually write one other thing to this really quick. Okay, so when do you make the money? When is money made? Say what? No, hang on, I'm going to show you. This will make sense in a second. These are rhetorical questions, okay? When is money made? When are expenses incurred? Okay, those are the two questions that we actually have to answer, okay? So, in the case of cash accounting, when is money made? Money is made when you deposit the check. That's when the money is actually made. When are expenses actually incurred? When you write the check for them. Make sense? So, I do a job for Carson Perry Scott, and I do it, let's say I did it December 1st of last year. They pay 60 days later. I get the check 60 days later, and I deposit it today. So the money is made today. That's when I make it. It's when the check actually goes into my bank account. Make sense? When are the expenses made? I mean, when do I incur the expense? Well, when I write the check to Alicia is when I actually have the expense. The date I write that check, not the date she did the job, the date I write the check. So I'm a relatively good guy. I write checks to everybody. Somebody sends me an invoice, I pay within 30 days. I actually do that. I'm one of the few clients I think out there that does that. But nonetheless, Alicia was on that job with me December 1st of last year. So, but I've been lazy. I got caught up in Christmas, whatever. So she sent me the invoice right away. But I don't write the check until today. So I incur her expense today, not when she did the job. Does that make sense? In accrual accounting, though, it works differently. In accrual accounting, what happens, the money is made the day you do the job. Job date. And the same thing happens with expenses. The expenses occurred on the job date. So let's take our, for instance, situation here, okay? So Alicia and I did a job December 1st, 2016 for Carson Perry Scott. I charged $15,000 for it. She charges $1,500 for it. So in a cash system, Carson Perry Scott sent me the check. I got it today. So I actually deposited this check on 2/2/17. That's when I made the money, not when I shot it. But in accrual accounting, it actually happens on December 1st, 2016. Does that make sense? Now, the thing about cash accounting is this is great because I've actually got the money in the bank account to actually show that this happens. I've been paid for this thing. Alicia, the job that is over here in accrual accounting, this is like phantom money. I'm saying that I made $15,000 on the 1st of December, but that money's not in my bank account. Carson Perry Scott has not paid me for it. There's a problem here, or an issue here. Does that make sense what's going on? Okay, same thing is the expenses here. I'm going to write Alicia's check. I'm actually going to write her check tomorrow. So it's going to be on the 3rd of February 2017. However, I incurred this expense in an accrual-based accounting system on the day we did the job. So this is also at 12/1/2016. So you can see I'm actually making income and incurring expenses, but I haven't actually collected anything or spent any money. Why on earth would I want to do this? People do accrual accounting because this gives you an excellent idea of your business. When did you make the money? When were you busy last year? When were you busy this year? Well, if you look at my cash accounting, you would think, well, wow, Verser was busy in February. Well, Verser may not be doing dick in February. Verser may be absolutely dead in the water. Verser was shooting the job in December. In cash accounting, you can't tell when you have a good season. You can't tell what your season is. You do not know when you're making money, and you do not know when you're spending money in cash accounting. Does that make sense? In accrual accounting, you know exactly when it happens. You know exactly when you made the money, and you know exactly when you actually spent the money for an expense. Make sense? This is more complex. This is much easier. This is how most people do it. This would be the way I would suggest you guys to actually thinking about doing it, because it's just that simple. Money that comes in is income. Money that goes out are expenses. You actually set it up like this to track those, at the very end of the year, you print this out and you actually do your own taxes, or smarter, you hire an accountant to do that. So how do you hire an accountant? I wouldn't suggest going to H&R Block. What I would suggest doing is getting a reference. You can get a reference from me or anybody else that's in the field. You want to have people that understand what photography is. So for instance, we talked about writing off the ballet tickets. I know that there are accountants out there that would not touch that with a 10-foot pole. That's not the person you need. You need somebody who understands photography and realizes that at the very least that might be a legitimate expense, and it's worth throwing the dice and hoping that you don't get, well, number one, you hope that you never get audited regardless, but number two, if you do, you've actually got a legitimate way to defend it. Make sense? But what do you then say to the accountant? And this is what my accountant said to me. So I'm just throwing this out there for you guys to say to them as a sort of a reason to work with them. But if I was going to get a new account right now, my first thing would be I would say to them, I am willing to hire you and pay you as long as you can save me your fee. So that's what my first accountant said to me way back in the day. He looked at me and he said, Verser, I can promise you this, I will save you at least my fee in taxes. And I was like, okay. Make sense? Okay. Are there questions about any of this? Guys, this one is a critical one. You should actually, I'm serious, think about, at the very least, get this software, get it in trial mode, whatever. If they do it in trial mode, whatever, set up set up a imaginary account, an imaginary business, and run through a little bit of this and see if you like the software, see how it sort of like works for you. But it's this simple. It's a checking account. All of you guys, I'm guessing, well, most of you guys have probably had a checking account at one point in your life. It's just money coming in, money going out. Are we good? Okay. Buying gear. It's connected to this whole thing about expenses, and so we need to actually talk about this part right here. So, at what point do you actually buy gear? Now, photographers, as a rule, some people are gear whores, other people are not. I am not a particularly, I have a base amount of equipment, but for the most part I don't. I used to keep tons of equipment. I don't do that anymore. Basically, I figure if I have 2 camera bodies, 2 lenses, 2 power packs, and 4 heads, I can do just about anything I need to do, or at least get started on it. So I don't keep a whole lot. What I would suggest to you guys, though, is to think about things like this. Again, when you're first starting out to do this, what I just recited to you, if you do it in ProPhoto, could actually be a $50,000 hit. That's a lot of money to lay out for gear right away. However, gear is a legitimate expense that you can write off, right? So let's go back to our $100,000 story. So you've made $100,000. And you've got $50,000 in gear, which are expenses. I'm going to call this gear. You subtract the $50,000 from the $100,000, you're left with $50,000 of taxable income. And if you have to pay, we'll say you're going to pay 10% of this, it would be $5,000 in taxes. You good on that? But now let's say we're going to take the very same scenario. You don't make $10,000 a year. You actually make $10,000 a year. So in your $10,000, you've still got $50,000 in expenses. In this case, you actually have a negative income. You've actually lost 40 grand. So there is no tax break on this because you didn't make any money. So the disadvantage to doing it in this scenario is you don't get to write this off. You get to write $10,000 of it off, but there's another 40 grand that just goes wasted. Make sense? So when do you actually want to buy gear? You want to buy gear when you're making a whole lot of money. You do not want to buy gear when you're first starting out. That is the absolute worst time because you're not making a whole lot of money. So there's nothing to write off. Does that make sense? If you make 0 income, there's nothing to subtract your expenses from. So there is no tax break on that. You made no money. So you have got to make at least more than your expenses, but in a real sense, to leverage it, you want to be making a whole lot more money than your expenses. Are we good on that? So when it comes to thinking about doing gear and buying gear and when you buy it, my suggestion to you is this. When you're first starting out, you actually try to keep this at an absolute minimum, get by with what you can get by with. You can rent stuff. Renting is actually better because in most cases, you can bill the client that you're shooting for the rental charge. Most clients will not buy your gear for you. So if I go out and buy a brand new $10,000 camera, I cannot bill that to a client. That's my camera. I'm shooting a job, I needed a camera, I go buy one, it's $10,000. I basically eat the 10 grand. However, if I rent that camera instead and I rent it for say $500, I can bill the rental cost of rental gear. I can bill that to a client. So I'm not out any money. It's an even thing. It didn't cost me any more money because I'm billing the rental to the client. Makes sense? So it's just in terms of thinking about this. In the old days here in Chicago, every photographer was expected to have their own studio. When I moved to, so everybody did, and your studio was a gift to the clients. Clients would just show up. You didn't charge them any studio rental. There was nothing done like that. It just didn't exist. That was how it was expected to be. When I went to New York, there is nobody in New York who has their own studio. Everybody there always rents it, and the reason they always rent it is they can bill the rental of studio to the client. Make sense? So I decided I'm going to adopt the New York method when I come back here to Chicago. I get rid of my studio. Every time I need a studio, I rent one, and I pass that rental cost on to my client. I ended up having a $30,000 increase in my income simply by getting rid of my studio. Does that make sense? It gets even better. I actually ended up renting a studio, changing its name, acting like it was not mine, that I didn't own it, and I would generate invoices that I myself would then pay to myself, which would give me an invoice that I could submit to a client and bill the client for my studio. Did I lose anybody on that one? Okay, so here, it's like this. I rent my own studio, and a client is not going to pay my rent. They are not going to pay my monthly rent, no matter what. They're not going to come in here and say, oh, your monthly rent's $3,000, here's a check. They're not going to actually do that. However, if I'm working as a photographer, there's 100 rental studios here in Chicago. I could go to Jeff Stella's studios, rent that studio. He charges $1,500 a day, and I could actually, he would give me an invoice for that $1,500 for the day, whatever. I would add that to my bill to the client. The client would pay me my fee and that $1,500 for studio rental. I would send him a check for the $1,500 and everything's great, right? However, I could rent my own studio, and instead of calling it Engelhardt Studio, I'd rename it Jeff Stella Studio 2. And it appears that it is somebody else's studio, even though it is mine. I don't let anybody know it's mine, but it appears that way. It's got a different name on the door. It's a secondary business that I'm running. I generate an invoice from Jeff Stella Studio 2, which is really mine, to myself, billing myself for $1,500. I turn around and send that invoice to my client and charge them for it. They pay me the $1,500 for the studio rental, and it goes into my pocket to pay my monthly rent. Make sense now? Oh, of course there is. There's all sorts of things, but I actually am not risk averse. Because the truth of the matter is, in my opinion, they have no right to expect that I'm going to carry a studio cost for them to do work for them. It's just that simple. But in New York, this happens all the time. There's a lot of photographers in New York who do not own, not only don't they have a studio, they do not own a camera. Not the first one. No lens, no nothing. They don't own a light, they don't own a light stand, they own nothing. They basically, they get a job, they rent an entire gear package, they rent a studio. all of that cost gets billed over to the client, whatever, and they don't have to take a hit on any of that. You go out and buy a $10,000 camera, that's $10,000 out of your pocket. You've lost now. How do you bill that to a client? You can't. Although you can do the same trick that I just showed you with the studio. You can actually do your own equipment rental company as well. So if there's one thing I'm trying to do to you guys here is open up your thinking about this. This is all, remember the pledge we took here in first class? It's all about the money, folks, and it is all about the money. So there is absolutely no reason that you can't think of, oh yeah, I've got a rental business on the side, and you get your little brother to be the face of it. If you need somebody to, actually be sitting there like it's a different company, or you get one of your friends, somebody in this room. Somebody can pay Alicia $50, not 50, I don't want to shortchange you. Pay her $250 to show up and act like she's the gear rental house. It's really your gear. She's just acting like there's a company that has it, whatever. You charge the client $750 a day for your equipment. Because you can't go in there and just say, well, okay, I'm going to bill you for using my equipment. They'll balk at that. But if you say, I've got to rent all this digital gear, I'm renting it from Night Limited, just because you and Alicia are in cahoots together or whatever, and the check is going to her, and she turns right around and says, okay, I'll take my $200 out of it and give you your, $550 that because you were billing at $750 a day. You guys get where this is all going. So again, there's nothing, I'm not trying to say to be deceptive about this. I'm just trying to say, in my mind, fair is fair, and if you can build this, clients expect to pay rental gear for studio and rental cost of studios and rental cost of gear. They flat out expect it. So if you put it in on an estimate to begin with, they've okayed that estimate and they have to pay it. There's no reason that they need to know who they're actually paying it to, right? When you go to buy a hamburger at McDonald's, do you find out who they bought their meat from and how much they paid for it? Are there questions about this? Okay, so back to the whole gear thing. When do you buy it? You put it off as long as you can. Financing gear, though, is something we seriously need to talk about. One of the biggest mistakes you guys can make, and one of the quickest ways you can go out of business, is to actually finance your business on a credit card. Credit card loans, or what would be considered a loan, a credit card payment, whatever, the interest rate on your credit card can be as high as 25%. That will kill you. You cannot sustain a business paying 25% on that. So what I would suggest that you do instead is this. If you're in a situation where you realize that, well, let's say, for instance, you realize, okay, I could buy $25,000 worth of gear, create a shell company to actually build this with, and on this one job I'm going to get, this one job is a month long, I can actually recover all of that money. I can build the whole thing back. Does that make sense? My scenario that I'm painting out? So you could try to do it on a credit card, but if you don't get paid or the client goes bankrupt or something like that happens, then you have got a $25,000, you've got $25,000 worth of gear, but you got $25,000 credit card charge. And if all of a sudden they start charging you 16, 17, 18, 20% on that, that's a huge amount of money. That's a real deep hole to try to dig yourself out of. Instead, if you decide that, okay, I really want to do this, this is a really smart move, I need a $25,000 loan, whatever, you go to the Small Business Administration Association, the SBAA. I'm sorry, not AA, just SBA, Small Business Administration. The Small Business Administration is actually a government program that is set up to give loans to companies that are just starting out, small businesses, exactly the people you are going to be when you leave here and want to go into business. It's a government program that is designed to help you. They can write you a loan of up to $25,000, and they do it at a rock bottom rate. So they'll do it at a typical, well, in this case, I don't know what the current rate is in the SBA right now, but I'm guessing it's on the order of 5 or 6% as opposed to the 18, 20, 25% that a credit card can actually be. Make sense? So it's just a better resource for you to go to if you decide to go down that road. But I am going to beg you to please wait till you start making money to actually buy gear. Are we good on that? Okay, next thing I want to talk about really quickly is insurance. How many people in this room? No, that's not a fair question. Okay, I'm not going to do that. there's this whole thing going down about health insurance right now, in case you guys haven't noticed. But the truth of the matter is, everybody hates insurance. Everybody. Everybody hates all kinds of insurance until you need it. And then everybody loves insurance, right? So the only thing that I can say to you is this. Number one thing, health insurance is not an option. I don't care what you have to sacrifice to do it. You need to get at least catastrophic coverage on some level. Because the truth of the matter is, without it, all of a sudden, you get a really wicked case of lung cancer. You could be broke for the rest of your life. You could never get this business off the ground, even if you survive the lung cancer, because you just go hopelessly into debt, and you can never get out of that. So again, health insurance is, in my opinion, not an option. Do everything you can to actually keep the cost down. So take a really high deductible. Take something that only covers catastrophic stuff. Do you need insurance to cover a broken arm? Probably not. Can you spend $1,000 at the ER to get it fixed? But nonetheless, you can afford, right? But all of a sudden, you're in a car accident and it's your fault. And so there's nobody to sue for this, whatever, and you're in the hospital for 6 months, and you end up with a, $750,000 hospital bill or $1 million hospital bill. You won't recover from that. So it shouldn't be an option. So again, I would think about it in the terms of trying to deal with it. At the very least, try to get it at least a minimal amount of coverage that would cover the worst case scenarios. So I'm just going to throw that out to you. However, health insurance is not the only one. We talked about this last week. We talked about having liability insurance. The whole reason we were doing corporations and LLCs was we were trying to mitigate our liability. And we talked about business insurance and certificates of insurance. Do we all remember that? All right, do we need to review that part really quickly? All right, so again, you're a wedding photographer, and the wedding party is going to be at the Hilton Hotel. Can you go shoot without a certificate of insurance? No, you cannot. They simply will not let you in. The only way you can get a certificate of insurance is with business insurance. So what business insurance basically is designed to do, and I think, did I send you guys a link about the APA one? Okay, it's just a good source of, again, to sort of like, if you're interested, when you're interested in doing it, a place to go to sort of price something out and see, again, what it'll actually cost you to do. What most insurance companies do is they actually expect you to insure your equipment with them. The amount of equipment that you insure is how they set the premium. Then what comes along with that is insurance for all this liability stuff. Make sense? So it's like when you buy insurance for your car. The price that you pay, the premium you pay, is based on your car. So if you've got a 10-year-old beater, Volkswagen, you pay $300 a year in insurance. If you've got a brand new Ferrari, you pay $30,000 a year in insurance. However, both of those policies will have liability clauses in them to cover, $1 million if you hit somebody, or $2 million if you run into a building or whatever. The liability clauses in there have nothing to do with which car it is you're actually insuring. Makes sense? Business insurance works the exact same way. So once you get that business insurance, then that insurance company is who will issue your certificate of insurance. And again, I showed you guys this one before. And so this is just another example of what it actually looks like. So again, my insurance is about $1,000, $1,100 a year. I cover 30 grand in equipment, 35 grand in equipment, something right around that order right there. But what the Hilton Hotel is going to care about is this $2 million worth of coverage right here, or the $4 million in aggregate cover. That's what they're going to care about. And without it, you cannot shoot at the Hilton Hotel. There's a gazillion places that you can't shoot. So it's just something to keep in mind. You're going to have to go down that road and bite that bullet. Getting an agent or a rep. I'm going down just a whole quick list of things, whatever, a litany of things, so it's a little all over the place, a little bit random. We are going to finish getting into serious pricing your work tonight, but I just want to touch on these last bit of bases right here. So, getting an agent, that's a double-edged sword, whether you have an agent or not. Getting an agent is no indication at all that you will actually get work. It can actually be a really tricky thing, especially when you're first starting out, because what most agents are going to be looking for is photographers who already have clients. They want you to come into an agency paying them money right off the bat before they actually start to work for you. So they're much more interested in somebody like me than they are interested in somebody like you, because I've already got an established client. I can walk in today and, you know, hi, Joe agent, I am bringing, you know, $500,000 worth of billing expenses to you. You can have your commission on that $500,000. And they're like, welcome aboard. Because I just walked in the door and gave them $125,000, right? So a typical agency will charge 25 to 30% of your creative fee, not the total cost of your invoice, but your creative fee. So in the case of the job that I did with Alicia, it was $15,000 was my creative fee. Now that bill was $16,500 because I have her cost in there as well. The agency is not going to take a percentage of her cost. They are going to take a percentage of my creative fee. In the case of a 30%, if that's what I'm paying them, that's $5,000 out of my $15,000 creative fee. That agent better be fucking doing miracles for me to be paying that kind of money. So again, there's no guarantee in this thing one way or the other as far as that part goes. There are people who have had agents that have made them fortunes. There are people who have lost fortunes on agents, and I can't tell you, I've done both. That's what I can tell you. I had one of the best agents in the world. She made me an absolute fortune, made herself an absolute fortune, and I've had a whole string of losers as well that I ended up paying them more money than they ever made me. And it's just, you know, there's no guarantee on that. One of the advantages of having an agent, though, is that you separate yourself from the client when it comes to money. So when it comes to talking about your fee, your rates, all of that kind of stuff, your agent negotiates that, not you. And there's an advantage to doing that because you're not the person talking directly to a client saying, you need to pay me $15,000 a day to shoot this job. You've got somebody else advocating that for you. Make sense? It's easier on you. It seems, I don't want to say it seems more professional, but it seems to be cloaked in a bigger sort of business atmosphere that you have got a team that's negotiating for you as opposed to you doing it yourself. It is perception, okay? Perception is worth a certain amount. So again, it's just something to actually keep in mind about this. However, I do tell everybody this, and it's something to, when you are negotiating, if you decide to be an agent and you actually decide to do that, what an agent will actually say to you is that they want 25 to 30% of your creative fee. However, what I would counter them with is this. I'll say, okay, I will give you 25% of my creative fee. However, you pick up the same percentage of all of my advertising. So if I'm going to do self-promotion in a year and I spend $10,000 on a promo on a snail mail piece, I would expect that agent to pony up 25% of the cost of doing that as well. So again, this is the cost of me doing business. I expect you to pony up that as well. Does that make sense? Okay. It's not going to make you rich doing that, but at least it will cut a little bit into what the money that you're going to actually lose paying an agent. And I didn't figure that one out till really late in my career. So I just thought I would throw that part out. Did you guys end up doing the cost of doing business calculator? You should have turned stuff in, or at least turned it in tonight on Moodle. That's how I expect all of those things to actually be turned in. Were there any surprises? Did it seem like good surprises or bad? Oh, okay. I'll take a look at them and we'll actually talk about that next week because a lot of it can actually seem crazy high. However, one of the things that clearly happens, and I'm going to warn you about this right now, most of you guys, your tendency is to walk out of here, is to leave school and way, way, way undercharge for whatever it is you're asked to do. So it may not be as high as you actually think. It actually might be a legitimate thing and you just haven't thought about how much money you really should be charging and what you're actually worth. We good on that? Okay. So we're going to get into licensing right now, which is, there's another term for it. We'll call it usage as well. This is really long and involved, so I'm going to get into talking about it. We'll take a break. We'll come back and get through a little bit more of it. But I'm trying to get through usage tonight. The one thing that I can tell you, at least, or the thing that I want to say that probably is the reason to pay attention to this part of the lecture more than any other, is licensing is how people really make money in photography. It's not necessarily, well, I take that back. Your creative fee is one thing. Licensing and usage is a completely different thing, and it can actually be the thing that really makes you a fortune. So it's worth listening to and at least trying to get the concept across in your own mind. So that's sort of where we're going to go with this right here. However, I'm going to start in a little bit of I'm going to take a quick little aside here first, because to think about licensing, we need to look at something else first. And we're going to start with copyright really quickly. So in copyright, everybody sort of thinks they know what copyright is about, but does anybody in this room? Does anybody in this room? Anybody in this room? Can you explain copyright to me?